Hi, this is James Shugg with Westpac London's end of day report for the 1st of November, Tuesday. Look, it's all about Greece again, unfortunately. Not long after I put this report to bed yesterday, we had the Greek Prime Minister absolutely flabbergasted everyone by the surprise announcement that he was going to hold a referendum on the bailout plan that was agreed last week in Brussels. He's going to ask the Greek people, well, after all, it's where democracy began, what their view is on the austerity measures, the debt haircut that was announced last week. He's also going to have a confidence vote on Thursday in his own government. He's only got a majority of 2 now after one of his MPs announced they're becoming an independent. Tomorrow he's meeting with the French and German leaders in Cannes ahead of the G20 meeting. But Thursday is going to be the really interesting day, of course. We've got the European Central Bank Council meeting for the first time under Mario Draghi as president, maybe delivering a rate cut if we're right. We've got the G20 meeting getting fully underway, and now that confidence vote in Papandreou's government. If he loses that, i.e. a couple of his own team don't back him, then all bets are off for the bailout plan that was agreed last week, the bank recapitalisation plan, and the as yet detailed expansion of the EFSF, because it certainly won't be enough if Greeks were to default. If Papandreou survives on Thursday, we've still got the referendum to be held either within weeks or by January, depending on who you listen to. The opinion polls currently show that Greeks are about 60% against the plan. They don't understand what it's all about, they just blame the politicians. So if that doesn't change and the referendum shows that the Greeks, and the referendum is going to be binding, and if it goes against accepting the plan, basically it looks like Greece will simply have to default. And that would bring with it a much more costly, it will cost European banks much more than the 50% haircut that they've already agreed to. It could just be brinkmanship, of course. Maybe Papandreou wants the French and Germans to come up with perhaps an 85% haircut or a 90% haircut and more relaxed budget deficit reduction targets, such that the austerity measures don't need to be as harsh. Who knows what his thinking is? Certainly Merkel, Sarkozy, the British Prime Minister Cameron, none of them knew anything about it. It was a surprise announcement last night. Anyway, that, and it was the main news story of the day. We also had a weaker Chinese manufacturing survey, which also added a little bit of negative tone into markets. And in the US today, the factory ISM survey for October, it fell from 51.6 to 50.8, so just above the level that indicates a stalled industrial sector in the US. And in the UK, we had a 0.5% rise in economic growth, in GDP growth in the third quarter, a little bit stronger than expected, but most of it was really a bounce from a weak second quarter, which was constrained by the timing of Easter and an extra public holiday for the royal wedding. The annual growth rate in the UK is only 0.5% as well, which is very weak. So the underlying story there remains pretty soft, as demonstrated by an October factory PMI survey, which fell from 50.8 to 47.4, the lowest it's been since the recession. So the Q3 numbers sort of look okay, but in October we've got a survey already telling us that we could be back in a recession. So it's not particularly strong news there. And it's not good news on the markets, of course. As I speak, Europe's just closed. We've got the London market down 2.2%, that's the good news. The French market down 5.4%, the German market's down 5%. We've seen all of the Thursday rally last week eroded, and some. So optimism related to the deal was totally gone, I'm afraid. And it's fed through into commodity markets as well. We've got gold prices down 1%. We're looking at $1,708 an ounce. Oil prices down 3.33% at $90.08 a barrel, and a 3.6% loss for copper prices. Let's see, in the US market, which as I said was down, or maybe I didn't mention it actually, yeah, the Dow's currently down 2.5% at the moment. The broader S&P is down 2.8%. Financial stocks, Citigroup, I think down 7% today. Financial stocks are the ones that have been hit the hardest in Europe, and that's had a flow-on effect in the in the US. Industrial stocks like Boeing are marked down very sharply too. The concern is that what the Greeks have done has increased the prospect of recession in Europe and negative flow on for other parts of the industrial world. Aussie dollar down 2.5 cents today, fell from 1.055 to just under 1.03 against the US dollar. It's picked up a little bit at the moment, it's at 1.032. So still down almost 2.5 cents on the day. The RBA cut rates yesterday, good on them. As we've been saying at Westpac, it was going to happen before the end of this year. The debate is now how many more? Some say none. We say another three quarter point cuts. February, May, August is our view on that. We've got building approvals numbers coming up in Australia. We're looking for quite a big fall to come through there. There were some one-off factors that boosted the previous number. But all that's more fry. Let's keep watching what happens in Greece. G20 on Thursday, ECB meeting. Then on Friday we've got the payroll figures in the US to look forward to as well. So it's a pretty big week. All right, that's it for me. Back tomorrow.